Welcome back to Fast Money. Bitcoin is stuck in purgatory as the cryptocurrency struggles to break out of a tight trading range. Let's get to Bob Pisani at the New York Stock Exchange for all the details. Hey, Bob.
Hello, Melissa. After a fairly volatile year to date, which saw Bitcoin move in a range from about 6,000 in early February to nearly 12,000 in March, Bitcoin has settled down in the last couple of weeks, moving in an unusually narrow range, about $600. That narrow range has also corresponded with generally lower trading volume in the CME futures contracts also over the last couple of weeks. What's going on? Well, first and most importantly, I think the U.S. trading sessions seem a little more muted than the Asian trading sessions. I think there is a little bit of a hangover from the big volumes that we saw in May. Prices rose in mid-May, remember, as there were high expectations going into that consensus conference in New York. That was May 14th to the 16th. And while there were a few interesting developments there, the FedEx CEO, remember, said blockchain was the next big disruption. Nothing really earth-shaking came out of it. So it's understandable that things might calm down a bit after such high expectations. Also, I think a lot of people are very aware that the SEC needs to address several regulatory issues, including whether all ICOs are securities and need to register with the SEC, whether altcoins like Ether and Ripple are securities, and more specific criteria for approval of Bitcoin ETFs. My sense is that the SEC may soon clarify what types of ICOs would constitute securities, but they will probably let the courts litigate the altcoin issue, and they may not act at all this year on the Bitcoin ETF story. The bottom line here, folks, is we have hit a moment in the market with no watershed big news and a sort of lack of clarity on the regulatory front. Back to you, Melissa.
All right. Thank you so much, Bob Pisani. You know, it's interesting because back in December when Bitcoin futures were first listed, people got very, very excited about legitimacy coming to this asset class. And here we are. We're sort of just, did this make sense, Pete, in your view, in terms of more money trading it, and so therefore more price efficiency, maybe?
It could be. I mean, you don't expect something to be as extreme volatility as what we were watching early on when this was absolutely crazy each and every day. I'm a little bit surprised how calm it's become. I mean, that's been a bit of a surprise for me. But everybody's been focused more and more on what's going on in terms of regulation and clarity there. Yeah. And that will make a difference as well in terms of volatility, I think, of the Bitcoin.
I just think price discovery means that there's actually a lot more efficiency to a market. I mean, there's so many more places to get pricing and different exchanges. And before, that's all we would hear about, people arbing exchange to exchange. So you want to know the Bitcoin price in real time? You got it anywhere, anytime. That wasn't the case. And
the rise of the trading desk, and we had Susquehanna on yesterday, Bart Smith. This may be the only area, and I'm sure, you know, somebody will correct me if I'm wrong, that's growing trading desk operations in this environment for cryptocurrency.
With more to come. I mean, you can speak to count, obviously. Goldman Sachs announced that JP Morgan did a whole total 180. And with price discovery comes the dampening of volatility, which is a healthy thing, which speaks to a maturing, as we will speak about, marketplace.
Well, our next guest says the charts could be pointing to a Bitcoin breakout ahead. Let's go off the charts with Robert Slimer of Fundstrat Global Advisors. Hi, Rob.
Hey, Melissa. Well, price is news in the crypto world, and I think there's some very important levels coming up for Bitcoin literally in the next couple of days. So let's take a look at the long-term picture, because I think we have to start here, because the longer-term trend is still technically up. If we define a trend by a series of higher lows all the way through, even in this range here between Q4 2017 and where we are in 2018, it's still a series of higher lows. So it's fairly important. In fact, these lows right here are going to be very critical that Bitcoin holds those levels. On the other side, this level up here, we'll call it 9,500, is also very critical. So that's the big backdrop. I think that the next key point is if we look at the shorter term picture for Bitcoin, the daily chart on Bitcoin is very instructive. This 15-day moving average, the purple moving average, is a very good proxy for trend. And if we think about what does it take to turn a security or a market or a cryptocurrency around, it first needs to bottom, then it needs to reverse through that uptrend or downtrend, and then it actually needs to turn that trend positive. So we have step one in place. We have a bottoming phase in place. It's starting to go sideways, and it's right at the point where it's challenging its downtrend. It still needs to get through that level. When we look at the RSI indicator, this momentum data at the bottom of the chart, it's pretty oversold. And we've seen similar inflection points off those levels. So the setup is there, but what we need to see is the token actually break out and move through some very key levels. Now let's look at the intraday chart. This is a 4-hour chart going back through May and into, April and into May. And we have this big trend channel in place here. And that 15-day moving average served as a pretty good proxy when that trend reverses. And now Bitcoin has come right back to, call it this 7,800 level, and it needs to get through that level to confirm you're actually getting a trend reversal. The two key points on the downside that I think are really important here, this is 73, call it 7350, and that's about 7,000. If Bitcoin can't hold those levels, I think we're seeing that longer-term picture turn negative. But I think this number here is going to hold. I think Bitcoin's going to rally through that 7,800 level. I think the next move is to the upside.
Should we invite Rob over to the desk?
Just on the arrows that he drew.
I mean,
We're good.
Ryan will bring the
I feel like we either invite or we don't. I don't think we asked the question.
Good to see you, pal.
All right.
So it's Mel's call, don't ask.
Actually, yes, it is.
Feel like
I'm just doing it out of courtesy.
Ah, I see.
She's a very nice woman.
Okay, so Rob, was there any point at which Bitcoin technical analysis does not work or did not work in the past because of the liquidities involved? And I'm thinking back in December when we saw that massive run to 19,000+. Was there anything in the charts that would have said sell at that point?
I didn't call it, to be quite up front. It certainly violated trend. We saw breakdowns. We highlighted support levels. I didn't see it moving from, call it 20,000 down to 6,000. But it did break trend levels. You did see reversal. You did see the moving averages turned over, as we saw on that daily chart. And right now, right here, I think we're just on the point where you're starting to get an inflection. To your question about liquidity, as a technician, I always think the markets respond to technical analysis, so I'm very biased.
Rob, why haven't we heard any technicians say the bottom's not in? In other words, everyone says this is it, this is it. No one said it's going to 3,000.
I'm not sure that's the case. I think there's obviously a very active community on Twitter, and I think there's plenty of bears, and I think there's plenty of technical bears out there that are arguing it's going lower. So I think...
What's a bearish level that you're hearing out there that is plausible?
There are levels around 5,000. There's levels around 3,000. So those are pretty important support levels.
Question just from a volume perspective. It seems like there's a tremendous amount of over-the-counter trades that are big block trades that are occurring that aren't actually showing up. And I'm getting calls all the time from miners, if you will, that are looking to actually transact in this and actually sell big chunks of Bitcoin.
People below the age of 18?
Over the age of 18.
Not children.
the Bitcoin miners. But the idea of the block trades, over-the-counter trades that are occurring that you're not seeing from a volume perspective, it's not being sort of like advertised, if you will.
It's a great point. I don't see that. There's clearly a bigger OTC market developing. We hear that from the brokers. We hear it from the clients. It is happening. There are trades developing, but we don't see it in the charts. All you see in the charts is the volume's getting lighter and lighter and lighter as the cryptocurrency moves sideways.
Okay, and just to underscore the level that you're watching, Rob, here.
So there's 3 levels. On the upside, let's call it 7,800 is very important. On the downside, 7,350 is the first level of concern, but a break of 7,060, the lows we just put in May, I think is going to be a problem.
Okay, Rob, thank you.
Thank you.
Rob Slimer. Anybody buying?
God, do you have a fake ID, speaking of miners growing up?
No, I didn't need to have a fake ID because I looked older than I still look older than I am. Just saying. I mean, I'll be 38 next week.
I believe both of us. I believe both of us.
Anybody buying Bitcoin? Back to the question.
Look, I think Bitcoin's fine. I think it's found stability. In my opinion, I think what's happening now is the institutional community is waiting for clarity from a regulatory perspective and a custody perspective. The most important thing is they're really interested in it. We're having meetings all the time.
What does it have to do? Why are institutional investors waiting, though, to invest in Bitcoin? Bitcoin is a commodity. There's no regulatory uncertainty about that.
Look,
and there are custody solutions.
They're not necessarily as interested in Bitcoin as they are in some of these other coins, the consumer utility tokens, or even the some of these altcoins that are trading. So I look at it and say they're ready to sort of disperse capital. They just need to have that custody solution in place and the ability to do it. But I'd say this: the differentiation, from my perspective, are the early with performance. And performance of a lot of these hedge funds is going to be the early adoption of understanding this marketplace and really being the first investor as a hedge fund to come in and actually deploy capital, because as capital comes in behind you, it's going to change the performance metrics, in my opinion.
No, I'm not taking this dip in the market bad at all. I'm just hanging out, just going to a friend's house. I'm doing well. All right, I'll catch up.